Welcome back to the Dividend Diplomats YouTube channel. Got your boys here, the Dividend Diplomats. Whew, this was an exciting week. We had two of the largest retail stocks report earnings. We're going to discuss them here. And my goodness, Laney, they could not have had any different reactions to the stock price with these two companies. Buckle up. Let's talk through it, everybody.
Buckling up, guys. But before we do, smash that subscribe button. Give Bert, the Hurt, and Lanny here a nice thumbs up. Two of the biggest retailers making waves in the stock market this week, on top of more data about CPI and inflation, all coming together all at once, sent one stock skyrocketing one day. But then the next day, some other things happened. So, Bert, obviously, I think everybody should know who these two stocks are, but what stocks are we talking about today, brother?
We're going to talk about Target, ticker symbol TGT, and Walmart, ticker symbol WMT. Since Target went first, is the earnings release? Talk about Target. Let's talk Target,
Do it. Let's talk about
buddy.
it. Let's talk about Target.
So, what happened here? It was an oddly decent quarter for Target. I think there was more optimism than expected, despite the fact that Q3 comp sales decreased 4.9%. There was some very positive news buried in there for Target. Operating margin was higher than expected. GAAP EPS was $2.10, which was 36% higher than the previous year quarter. The big thing that was announced in there, Lanny, Target seemed to get that inventory under control. That was one of the big nuggets that came out of this.
Sell it all.
Yeah, no, inventory decreased 19% from the previous year levels. And what does that mean? The lower inventory means there are going to be less price reductions at the end of the year. Target's not going to be fire sailing everything at a loss. They're getting it right. They've tried to map out their inventory to match the decrease in consumer demand that's been happening and led to that sales decline.
Yeah, and we'll see how close they are come this holiday season, guys. Now, again, it's not like they blew the cover off,
Mm-mm.
off any balls here, because $2 in EPS isn't something to, pound your chest about, because I mean, they were performing much better before COVID, obviously during COVID. They beat estimates. That was also the key thing, is that they crushed what they estimated this company to do, not what they actually they did,
Mm-hmm.
but the estimates of what they had going into this, they crushed. Yeah, I think the inventory levels is going to obviously help as much as possible. And we'll have to see in the 10Q, theft and all that
Yeah.
component to see how that did for Target this past quarter.
Yeah, I mean, you walk in a Target, you shop, you see a lot more stuff locked up. They're taking a lot more action to try and take care of the theft, them and so many retailers. So I think I saw somewhere there was an interesting tidbit that the CEO was claiming that people actually liked having all their stuff locked up, all the stuff locked up so that consumers can't steal it. I think it was the CEO. Somewhere I read that quote. I don't necessarily buy that. I think it's very annoying when you have to hit the button and have somebody unlock something to get you that. But if it's helping Target's result as shareholders, you got to do what you got to do, Lanny, right?
Put the cage up, guys, and hide the key. Throw that key away. So
Yeah.
Target, that sent that stock price skyrocketing, guys. This all occurred on Wednesday. That stock price shot up almost 18% on the day that this earnings release came out, because that was also combined with some of that way better than anticipated, some inflation data, as inflation rate comes down. So Target popped all the way from, first it was in the mid hundreds, then it finished off Tuesday above 110, then another 18% came back on top, finishing close to over 130. And now they're sitting at 129.94 at the time of this video.
Yeah, that's right. So let's run them through our screener here quickly. Let's talk about some of the metrics here. Prices as of 11/16 Thursday here closed 129.94, 6 cents from that big $130 mark that we're all going to be keeping our eyes on to see if it crosses over during this week. Forward EPS per Seeking Alpha was $8.29, gives you a PE ratio of 15.67. Lanny, can you tell us what that payout ratio is?
I certainly can, Bert. $1.10 per share per quarter, $4.40 per year. 53% dividend payout ratio, or big target, the bullseye. So yeah, looking pretty solid there. Obviously in the safe zone still for target. Obviously they had a smaller increase this year from 108 to 110. This was after they went from 90 cents to $1.08. So
Yeah.
obviously expect 2 to 3% probably coming up
Yeah.
for the next year or two.
Yeah, they're not going to be doing a large dividend increase there, though. But the big news was they did become that dividend king, though. So even though we're going to be expecting that low growth below that 5-year average of 11.59, they have that strong history of increasing a dividend. Now, with the price shooting up, the yield's coming down. Their dividend yield is now 3.39%.
Yeah, I think that's what the best part about this was, just saying, hey, how fast that stock price comes up and how hard that dividend yield comes down, guys.
Yeah.
So for all you bond treasury investors out there, CD investors out there, just keep that in mind. As soon as more slash better economic news comes out, dividend yields will be going down because stock prices will be going up, and chances are potentially financial institutions or other areas rates will
Yeah.
come down too.
Yeah, so we talked about Target and how it popped 18% on the day of earnings. Let's talk to Walmart, who was down 8% when the company released earnings on Thursday.
Whoa. So
In this,
Target was up, Walmart was down, guys. Target was
yeah,
up, Walmart was down. Why the heck was Walmart down after they released earnings?
what was funny is when you actually look at the numbers in the updated guidance, that's not what's bad here with Walmart. It was a lot about what was said, but let's talk through the numbers first. Consolidated revenue is 160 billion, up 5.2%. Wait, 160 billion. Consolidated
And
operating
they had revenue up. The revenue was
yeah,
up. Target's was down, theirs was up.
consolidated operating income up 3.5 billion. EPS came in at 153 above the analyst earnings. So they grew on the top line, they beat earnings on the bottom line. The guidance is what was funny. Their guidance going into the quarter was 4 to 4.5% sales growth. I guess analysts expected their sales growth to be 5.61%, and management disappointed a little bit because they said sales growth is only going to be 5.5%. So they increased their sales guidance, but they just didn't increase it quite as much as Mr. Market wanted them to. So,
Yeah, and obviously they warned a little bit about, I know the CEO, about deflation coming for the holidays, lower turkey prices for the holidays as well, guys. So really hitting those financial statements hard. But it's interesting because how two companies can report completely different earnings, but yet one flies up and the other one comes down over 8% today on November 16th. That was Walmart stock down to $156.04. Now, Bert, we'll also run them through the Dividend Diplomat stock screener. And we're going to see which one is the better retail stock to buy right now. See if you guys watching this, are you guys buying either of the two stocks? And Bert, to see if you are buying Target
yeah.
or Walmart stock. So let's see what Walmart looks like through the screener.
Yeah, when you take that price of 156 divided by 647, that's a PE ratio of 24.12x.
Man, they've never been a low PE
No,
company. The dividend is $2.28 with a payout ratio of 35%. So much more room to grow the dividend.
yeah,
But the question is do they?
no, they don't. Their 5-year dividend growth rate is 186, and they're about to be a dividend king at 49 plus years. Walmart has that they're consistent with their dividend increase. They're consistently bad. It's consistently that 1 cent quarter increase in the dividend.
Yeah, so for all you fixed income investors out there, don't buy Walmart stock.
That's right.
Um,
Their yields,
Dividend yield is 1.46%. So the combination of that plus the dividend growth, that is not why you buy Walmart stock. Down 5% in the last 5 days, up 9% this year, up 5% since last year.
yeah. So we'll put the chart up showing them side by side.
Mhm.
I mean, me, just right out of the gate, I'm not going to buy either. The chance to probably buy Target, that window's gone to get them at the super discount. Now they're much
Super
more,
discount.
yeah, they're get them on that clearance rack in their own store, but like that opportunity's
Use the
gone.
red card.
Yeah, and there I'm just going to keep looking for other stocks. I have plenty of shares of Target. I don't want to keep adding more to it. Walmart, when I look at the metrics, 24 PE, yield of 1.46%, even after dropping 5% on the day of earnings, 8% from like that, or 5% this last week, 8% on the day of earnings. Just doesn't fit my metrics. So that's an easy pass for me.
Yeah. I'm not buying any of the two stocks either. Yeah, I think Target, obviously, hey, believe in their big retail, big red. Probably that 105, 110 was a very sweet range to grab a few shares. And Bert, I think you might have grabbed one. I might have grabbed
Yeah,
one
not
this
many, but I
year.
grabbed a couple. So everyone, let us know what you think of Target. Let us know what you think of Walmart. Are you buying at these prices? Let us know in that comment section down there below.
Guys, if you haven't, subscribe to this channel, like this video, keep saving, keep investing. Let's get to financial freedom. Keep rocking with us. Keep building those dividend stocks in that portfolio of yours.
Remember, if you're not with your boys, you're against us. So get out of here, Jack.
Oh, that was Bert and Laney from the Dividend Diplomats. Over and out.